What's up, guys? So in today's video I'm going to be talking a bit about my Stash Invest portfolio. So before I get into the video, guys, if you guys enjoyed this content, please smash the subscribe button and give me a thumbs up. So before I go into the progress of my Stash Invest portfolio, I just want to give you guys a quick heads up if you're not familiar with the platform. So basically, Stash is basically a easy savings app that you can link with a debit card, and it kind of helps you manage your money. And over $1.8 billion has been set aside by stashers. 4 million people use the platform. 86% of stashers are first-time investors, and they also offer stock-back rewards. So for example, if you buy something at Walmart using your Stash Invest debit card, you get a percentage of that purchase and stock-back rewards. So, and basically it's just a really cool way to buy partial shares in lots of big companies like Amazon, McDonald's, Facebook, etc. And the fees are pretty low as well. I'm only on the $1 a month plan. So just to quickly get that stuff out of the way, if you guys weren't familiar with Stash Invest, the reason why I like Stash Invest is because it allows you to invest in partial fractional shares, and that is the main reason I use it. But it also really helps you build up the habit of saving and paying yourself first. It's really, really important, guys, to build up habits. Whether you're dealing with $1, you're dealing with $1 million, habits are going to give you the success that you're looking for. So let's just take a look in my portfolio. So in this portfolio, just sitting just under $900. I've invested $785. I have a $112 return. Now to give you guys a percentage, I'm up 14% on this portfolio. So what is exactly sitting in this portfolio? Well, I actually don't have too many investments in this portfolio. So I'm sitting on just 5 stocks. So I'm sitting on Alphabet, Apple, MasterCard, Microsoft, and Adobe. So the reason why I wanted to keep it small with this portfolio is because I was kind of moving in and out of lots of different companies. I had I think I had Amazon, I had Dollar General, and while a lot of those companies were doing well, it was just getting harder to manage to kind of follow the research and read quarterly reports. And like the more companies you own, like the more time you have to spend reading and tracking the stock price, and it just becomes very hard. So what I did is this year I recently sold some of my Dollar General and Amazon, and I'm just holding 5. So I'm just going to keep it limited to about 5 stocks in this portfolio. So we'll see how we do. I started on Stash in April 27th, 2019. So I'm up 14%. So let's see if the fewer companies will do better. And as you can see here, I'm only auto stashing $5 a week. What is auto stash? Well, simply auto stash is simply automatically I'm pulling only $5 from my bank account into this portfolio. So why is auto stash important? Well, one of the reasons why I like Stash is it really helps you for beginners. As you could see there in I mentioned earlier, 86% of the people that use the platform are first-time investors. So the most important thing when it comes to investing in something is you have to pay yourself first. So the easiest way to pay yourself first is just to set up an automatic transfer coming from your checking account, going straight into your bank account. Now, if you can be Stash, it could be Fidelity, Robinhood, whatever platform you're using. You want to automate this because it's so easy. You know, life goes on, and it's so easy to kind of forget to do this. So if you just have an automatic transfer set up, it does it easily. Now, previously I had $20, and I've decreased this to $5. But I'm basically playing with the numbers here, just seeing how much I should do. I'm thinking about increasing it in later this year, but right now I'm just sitting at $5. So there's also another cool way that you can add to your stash. You can do roundups. So every time you buy something, it takes the difference. Let's say you buy like a candy bar or something like that for like 80 cents. It'll take that 20 cents, send it to your Stash Invest account. But that's basically the easiest way. So just doing this by automating everything, I've been able to save over $505 over the past just under 9 months since I've been on the platform, which is really cool, because if I had tried to like wait and save up that $500, it would have been much harder for me. But by just automating it every week, taking the money out of my account, it's much easier to accomplish, right? Set it and forget it. So let's just take a quick look at some more of the things I want to talk about. So now I want to kind of go individually of why I chose these 5 companies. So number 1, Alphabet. For me, Google's compounding at around 20%. So I can show you guys some of the performance numbers. So let's see here. So if we take a look at historical performance, we see that I think Google stock is definitely one. They just hit the $1 trillion club. And for me, this is just a no-brainer stock. Google, Google, YouTube, these are products we use every day. And I show you guys some more numbers. Okay, yeah, so basically we Google something, Google YouTube, two products I use every day. You're not going to have as fast as growth probably as things like Apple and stuff like that. But I'm just looking at some of the historical numbers. They're actually showing in the app since I'm doing this video on the desktop. So Google over the last 15 years has compounded 19.4% returned annually. So that's around 20%. That's usually that Buffett number. Warren Buffett was famous for compounding his investments about 20% per year. So I think Alphabet is very safe. They just recently joined the $1 trillion club. I think this is a pretty safe stock here. Their products are pretty well used throughout the world, and they have a pretty strong moat and brand name. So secondly, Apple, of course. Apple, the largest company in the world. This one, don't overthink it. They've got a cult-like following. They're always innovating. They're always coming out with new products. And even though the stock price is way, way up, that's anticipation of the 5G and the rollout of their new products. And they're also thinking about coming out with a cheaper iPhone alternative to kind of get more people using that app store where they make a ton of money from. So Apple, and check out some of the historical performance numbers on my phone. Since they went IPO, they've returned 33%. So I think I think it's really hard to get away from Apple shares. It's just, it's even got a biblical reference in the logo, the forbidden fruit. This is kind of just a no-brainer stock. And, until it does, poorly, I'm going to keep holding it. I just think it's a really, really strong holding to own. Okay. So secondly, MasterCard. So actually, Visa is actually my largest holding in my total portfolio with the shares I hold in Fidelity. But in stash, I wanted to go with MasterCard here because I think both of them are in great position. So MasterCard, since it went IPO, is returned 39% per year. Just phenomenal gains here. And like I said, these companies like Visa, MasterCard, they're not banks. They're simply just facilitating the transactions. No risk. All the risk is from the banks. This is just, they make money every time they tap or swipe. Visa, MasterCard, these are probably two of the best stocks to own, period. We're not even close to seeing the digital payment revolution. We still got lots of growth to go in places like Africa, Latin America, Asia, where the majority of the transactions in those countries are done in cash. So lots of growth for Visa and MasterCard. These are kind of just the two no-brainer stocks. And I've been doing really well on MasterCard in this portfolio, so that's why it's there. And again, Microsoft. Microsoft, another company that, is doing really well. They've got a wide suite of products, everything from Xbox to Skype, LinkedIn. Their cloud-based business is doing really well. And this is just another company that a lot of us are using. Even the computer that I'm recording this video on uses the Windows platform. So if if you're involved with technology, it's pretty hard not to be using Microsoft's products on a regular basis. So Microsoft shares since the IPO have returned, checking on my phone, have returned about 15%. So you're not going to get as good as growth as you would with Apple or Google or something like that. But for this portfolio, I like the consistency of Microsoft and the fact that shares are kind of up recently. I like what I'm seeing there. And then the final position I have is Adobe. Now, Adobe is probably one you're probably not really familiar with if you're not into like things like design or programming or web development, but Adobe is another company that is very, very hard to do without. This company has been doing absolutely gangbusters the last couple of years, as you can see. And the fact is that this is pretty steady, slow, steady business. They have lots of different products. And if you're watching video on your computer, you're using their Flash player. So this is another company that people are using where you're not even aware of it. It's kind of a business that is very, very secure, and we can't, a lot of people can't live without it. Adobe is very consistent, and I'm going to tell you guys the historical compounding gains on the shares. So since IPO, Adobe shares have been compounded annually. They've compounded 18% annually, and the stock has been on a tear recently. So this is actually just a new position. Now that I opened, I'm already up 4% on this one. And I just wanted to add something a little bit diverse, but as you can see, guys, the majority of this portfolio is based in the technology sector. I like technology. I understand the companies very easily, and this is what's been destroying it over the past decade. So tech stocks have been on a tear. Netflix is actually the best performing stock over the last 10 years, but I actually own that in my Fidelity. But I just wanted to keep this portfolio small and concise so I could easily track it. So guys, what are the pros and cons of Stash? Well, one of the things I like it is that it's very easy for beginners to understand, and that you can buy fractional shares. So as you can see here, if I were to buy 1 share of Alphabet, it's very expensive. At the current price is $1,479. But using Stash Invest, I can slowly build a position over time. Even if you're just investing like $5 or $10 a week, over a longer period of time, you're going to acquire a share. And that's the important thing. It's not simply just having to buy it up front. It's that slow, small habits can add up over time. So if you even if you only have $5 or $10 to put into something like, for instance, Alphabet stock, over the long run, you're eventually going to get there if you stay consistent. Whereas most people, they look at the price and they say, okay, I can't afford it, and then it's not possible anymore. So that's one of the reasons I like Stash. The only con on Stash Invest is that simply you have to pay $1 per month. It's kind of like a pricing fee if your portfolio is under $5,000. So for me, it's like it's a little bit inconvenient because I know, with so many free trading brokers out there like Robinhood, Fidelity recently dropped their commissions. And most brokers are commission free now. Charles Schwab commission free. I know a lot of you guys, this video might not pertain to you. So if you're already a veteran investor, if you've already been doing this for a while, this video really isn't for you. But I'm talking to people that are beginners. You never invested before, and you kind of just want to dip your toe into it and get a feel for it. This is a great app that you can try out and use. I'm obviously recording this video from my computer, but it has a very good mobile app. I just decided to do the computer so you guys could kind of see a little bit better, because sometimes on the app, when I record it on YouTube, it's kind of small on the video. So that's it, guys. And if you want to try Stash Invest, just sign up using the link below on my video, and you guys will get a free $5 to sign up. And I get $5 as well, so it's kind of your way saying thank you for the content that I'm producing. And that's it. So I've been using the platform just under 9 months. I'm pretty impressed with it. It's very easy to see. And also I kind of use Stash Invest to me as like a separate emergency savings as well. It has a dual utility use, so you can use it to buy fractional shares, but you can also stash some money away for some emergencies. So that's it, guys. Let me know what you think about Stash Invest in the comments, and be sure to check out the link in the description, or you can check out I pinned this comment. You guys can check out Stash and sign up under my referral link and get your $5. So that's it for now, guys. Hope you enjoyed this video. Take care.